I look at the gold trade in three ways. I look at physical gold, which I see as insurance, not as an investment.
Yeah.
I own it to maintain my standard of living. I own it out of fear. A rising gold price, which I'm afraid we're going to see, raises the selling price of a commodity of a business, which should be good for the business. Investors who believe that they can differentiate between the good, the bad, and the ugly around the mining companies can invest in the best mining stocks. You increase your risk because you take operational and financial risk on top of the gold price risk. But theoretically, the index of the senior gold and silver stocks should outperform the gold itself by at least 100% if past is prologue.
In this interview, veteran investor Rick Rule shares a nuanced perspective on the gold trade. He views physical gold as insurance rather than an investment, expressing concern about a rising gold price impacting business costs. Rule suggests investors can differentiate by delving into senior gold and silver stocks, anticipating potential outperformance. For those willing to take on non-market risks, junior gold stocks present speculative opportunities with substantial returns but higher volatility. Stressing the importance of owning gold as insurance, Rule also discusses Sibanye-Stillwater, highlighting its platinum and palladium production in politically sensitive regions and the need for social stability in South Africa for long-term success. With that, let's dive into the video to hear Rick's full thesis.
If, in addition to being an investor, you're a speculator, which is to say that you're willing to take a different form of risk, a non-market risk, in hopes of achieving alpha, then you can speculate in the junior gold stocks. The junior gold stocks have treated me extremely well over the last 50 years because I've worked very, very, very hard. I've stomached breathtaking volatility, which is different than risk. And I have also courted risk. Speculators who invest in the junior gold mining sector, speculators who look for alpha, can generate some truly spectacular returns. But they have to do that being cognizant of the fact that they could easily lose 50% of their money if they choose wrong. That's the individual investor. There is no one-size-fits-all recommendation, with the exception of the fact that I think any numerate person on the planet needs to own gold itself as insurance against the idiocy of collectivism. I need to say I've known Neil Froneman, the CEO, for 35 years. I've drank more beer with him than either of us would care to admit. And I have a very high regard for him as a human being and as a corporate leader. Sibanye-Stillwater is, as you suggest, more than a gold producer. It's a platinum and palladium producer. And they have a corporate expertise of turning around underperforming mines, taking mines where the sustaining capital investments haven't been made for a long period of time, showering love, care, and attention on them, and returning them to higher standards of production. They operate in some fairly risky jurisdictions. And I suspect that the attractiveness of both the platinum and palladium story is a blessing and a curse for Stillwater. The blessing is that platinum and palladium are essential components of clean air. They're used in autocatalysts.
Yeah.
And I suspect if the price of platinum and palladium doubled, that it wouldn't change the finished price of an automobile, because it takes about $125 worth of platinum to reduce the emissions necessary to sell a $50,000 car. So it would be easy for the platinum price, easy for the palladium price to double without changing the finished price of the product where they sell the platinum and palladium. That's wonderful. The other part is both more wonderful and more challenging. Both platinum and palladium are politically constrained. They're produced in, let's say, gamey jurisdictions. Russia, which, by the way, is responsible for the low current prices of platinum and palladium, because, as you might gather, the Russians need cash, and they're selling whatever they have, including platinum and palladium, to gain that cash.
Yeah.
Zimbabwe and South Africa. If there were a real political disruption or social disruption in any of those three jurisdictions, one could assume that the platinum and palladium prices would do extraordinarily well. The problem for Stillwater is that a substantial amount of their platinum and palladium production comes from South Africa.
Yeah.
And they would expect to encounter the same sort of risks that the market would. Mercifully for them, they also produce a fair bit of platinum and palladium at the Stillwater complex in the United States. So they would have a benefit outside of South Africa. I
Yeah.
think an investment in Sibanye-Stillwater assumes on the part of the investor or speculator relative social stability in South Africa for the next 10 years, because the vast majority of the sort of treasure of Sibanye-Stillwater is still in South Africa. And a whole bunch of the upside is involved in their continued ability to outcompete others in extracting wealth in South Africa, where, let's face it, Caucasian run companies have not done a traditionally good job of operating in those societies. Neil Froneman has been amazingly successful negotiating the political and social challenges in South Africa and empowering a new young range of indigenous Black African manager and miner. And I pray for many
Fascinating.
reasons that he continues to be successful.
In this next segment, Rick Rule emphasizes the prolonged presence of internal combustion engines despite the rise of electric vehicles, particularly in emerging markets. He underscores the crucial role of platinum and palladium in supporting the internal combustion engine by reducing emissions through autocatalysts. However, Rule cautions that investor concerns about Sibanye-Stillwater should weigh heavily on political and social stability in South Africa, considering potential shifts in the political landscape and the risk of industry nationalization. The future of the mining industry in South Africa hinges on the outcome of elections and the ANC's collaboration with groups like the Economic Freedom Fighters. Investors need to assess these factors for a comprehensive understanding of Sibanye-Stillwater's prospects.
Whether the big thinkers like it or not, the internal combustion engine will be with us for a substantial period of time. I believe that electric vehicles will take more and more market share, particularly in rich countries. But I think that the expansion of motorized transport around the world in emerging markets will ensure a wonderful future for internal combustion engines. I might add that it's platinum and palladium that allows whatever vestige of support that internal combustion engines enjoy. The ability to reduce emissions from internal combustion engines through autocatalysts is a function of the utilization of platinum and palladium. A concern, an investor concern around Sibanye-Stillwater really, I think, has to take into account political stability and social stability in South Africa. It needs to take into account what the next elections are going to be like. Will the ANC cooperate with the Economic Freedom Fighters, whose platform involves the nationalization of the mining industry in South Africa? Or will saner heads prevail? Will the DA prevail in South Africa? In which case, I think you'd see a South African boom that would take people's heads off, figuratively rather than literally.
In today's insightful discussion with Rick Rule, we've explored the multifaceted world of gold trading and the intricate dynamics of the platinum and palladium markets, particularly in the context of Sibanye-Stillwater. From the wisdom of owning physical gold as insurance to the potential risks and rewards in senior and junior mining stocks, Rule's expertise sheds light on the nuances of investing in precious metals. As we navigate the uncertain terrain of political and social stability in South Africa, Rule hints at the pivotal role these factors play in Sibanye-Stillwater's future. The delicate balance between internal combustion engines and the rise of electric vehicles adds another layer of complexity, with platinum and palladium emerging as key players in reducing emissions. Before we part ways, don't forget to subscribe to our channel, like this video, and share your valuable opinions in the comments section below.